Okay, so let's get the session started, right? So for those of you guys who are here with us, if you guys have any chat requests, please do put them under the questions chat. Just a quick introduction of myself. I'm Dee Sing. I provide FX advisory to institutional clients. You can also find me on LinkedIn. So if you guys have any questions with regards to the webinars that are done on Wednesdays, Thursdays, and Fridays, right, please feel free to reach out to me on LinkedIn. Just a quick disclaimer, the information presented here is not to be treated as investment advice, and it's for educational purposes only. Okay, so I see that if you guys just join us, right? If you guys have any questions, please feel free to put them under the tab. So this is the agenda that we will be covering for today. We will first take a look at the key economic events, as well as the trade setups. And then finally, right throughout this session, if you guys have any questions, just type them under the chat box. Okay, so before we hop onto our trade setups, right, let's take a look at the economic calendar first. So I'll just bring up the economic calendar. So for economic calendar, you can actually use vantagemarkets.com, or you can also take a look at Forex Factory. Right, so either one would work. Right, so let's take a look at them. So just do a quick Google, type Forex Factory. You should be able to see this economic calendar. Let me just bring this up. Okay, so you can see that we have quite a few key high impact news events, right? FOMC, Bank of England, as well as ECB, right? So in this case, these are all the high impact events that are filtered according to this week's economic releases. And you can see that the ones in red are the ones with higher impact. So right now I'm on Forex Factory. You can also go to vantagemarkets.com. Right, just go to vantagemarkets.com for the economic calendar. You see pretty much the same thing as well. Okay, so this it's I believe this is under economic calendar. Okay, so over here you should be able to see the Forex economic calendar, right? This has all the key events, right? Not just for G7 currencies, but for the emerging markets as well. So in this case, you can see that again, right? Just take a look at compare the previous and actual data, right? And this colored boxes here would tell us the impact of this news event. So the higher impact ones would be your interest rate decision, your GDP data, retail sales data, as well as manufacturing, PMI data, right? So all this measures domestic growth. And then at the same time, right, inflation data, right? So that's also highly tracked by central banks. So if inflation is easing, there is a lower chance that the central banks will adopt a more aggressive rate hike. Okay, so this is on the economic calendar. Let's take a look at the charts now. So there are a few setups that I want to take a look at, right? Mainly on dollar index, Aussie dollar, as well as Euro dollar. So let's take a look at that, right? And at the same time, if you guys have any chart requests, please do put them under the tab. So let's take a look at dollar index for a start, right? So let me just bring up the charts. Okay, let's take a look at dollar index for a start, right? So dollar index first. So starting from the higher time frame. So this was the monthly support level. You can see that price wick below this level, right? So this was the previous resistance turn support level that we've identified over here. You can see that prices tested, and right now it broke, or rather wick below this level here. And this is partly driven by FOMC, right? So there is FOMC essentially in the latest FOMC meeting, they raised rates by 25 basis points. So in this case, you can see that there are signs that inflation is easing, and also Fed might be cutting back on its rate hike. So this is why it caused dollar to push much lower. In terms of price coming into a level, right? So when price taps into an area, you can see that there was just this, I believe we were somewhere here back on Wednesday, right? So this was the area, right? So we saw price testing this region, but again, right, coming into this area, if you're on the smaller time frame, right, you can see the market structures to give you a clue of whether the reversal is going to happen, right? So in terms of just looking at market structures, you can see that prices are still forming a lower lows and lower highs and eventually broke this area here. So if you take a look at dollar index, right, if we are on the weekly or even the daily time frame, you can see over here, right? So right now it's just testing this area. So it's still sitting on some kind of support level, but again, right, we need the smaller time frame confirmation to confirm whether prices are actually reversing from here. If not, it could just tumble much lower. So this is on the weekly picture. If you go on to the daily time frame, you can see even on the daily time frame, right now, just focus on this most recent moves. So focus on this most recent area over here. So what we see here is that prices are still again forming your lower lows and lower highs. And within this area itself, you can see that there are actually supply zones. So this is on the daily, right? So on the, I will just remove this monthly, right? So the idea is that on the monthly, we could be potentially sitting on some kind of support level. But again, right, if we are to see any pullback from here, we need price to start breaking the supply areas first. So the idea is that if support levels are starting to hold, you can see, and resistance levels are starting to fail, right? So this is another example of how price can actually start breaking every resistance level in terms of market structures, forming new higher lows and higher highs. Then this is a sign that this higher time frame zone is being respected. So if you're on the daily, you can see that right now, right, in terms of marking out supply demand areas, you can see that this candle itself is the last supply region that we have, right? So price came in, it consolidated around this area over here. You can see how it traded sideways. So price consolidated before we saw that breakout. So that is the last support and resistance level. Right now it's pulling back into this area. So this is the first supply region on dollar index, right? This is on the daily. If you're on the 4 hours, you can see we're just seeing this pull back into this region right now, right? So this for me is still a supply. So we could still see price push and reject this area, right? Coming into a demand area here. So right now, if you take a look at it on the 4 hours, right, prices are still forming lower lows and lower highs. This is still a bearish market structure with the break of the most recent low. So until there is a break of this high and also the supply region itself, dollar index, at least on the 4 hours time frame, is still bearish. Okay, so we need to wait for a break of this level, which is also what we can call our upside confirmation. If price breaks above this level, we could expect a deeper pullback into the next resistance level, which is this region. So this area here, right? So how we identified this resistance level, again, just taking a look at how price interact with this region. There is, again, a consolidation here. And then price broke above this level, tested this region again before it broke much lower. So in this case, right, if we do see a break above this level, this is the next resistance level that I will keep in mind. Right, so now that we have identified the zone, right, so recall that we did our Fibonacci extension yesterday, right? So right now I'll try and apply some of these concepts that we have shared yesterday here. So for Fibonacci retracement, right, just a quick recap. If we want to take Fibonacci retracement, essentially it's you identifying high and low points. You can see that this is the push down and this is the pullback. So what we're trying to do here is to identify the highest point and the lowest point and take the starting and ending point for our Fibonacci retracement. So by doing this, what we're trying to find is if there are any retracement levels that line up with this zone. So let's do that, right? So Fibonacci retracement using this high and this low. So once you do that, right, let's see what we have. Fibonacci retracement from the high to the low. You can see that the 38.2% retracement. So this is a level, right? This lines up with this first gray zone that we have found. And the second level, which is your 61.8 retracement, lines up with this gray zone here. So there are two retracement levels here. Yesterday, we also covered on Fibonacci extension, right? So for Fibonacci extension, yesterday, the one that we did was on trying to find support region. But in this case, right, this is slightly different. We're trying to find resistance. So for resistance level, we're trying to look for zigzag patterns that has either of these forms. So this is the first kind, and this is the second kind. So taking a look at this example, you can see that the Fibonacci extension level we have would be this area, right? You can see this zigzag pattern. The reason why it's important to identify zigzag patterns is because you can use the zigzag patterns, essentially these turning points, to help you to project your Fibonacci extension levels. So this would be 0.1, 0.2, 0.3. Now, what these levels mean, right? So these are the common ones that I often use, right? So what this level suggests is that if there are any Fibonacci extension level that lines up with this supply or demand areas that you have identified, right? Then in this case, there is a higher probability setup, right? There's some kind of resistance that's being faced there. So in this example itself, you can see that the 78.6 extension as well as the 127 extension, these are the two levels that line up with this area. Okay, this zone. So you can see these two zones, right? So first one would be the 78.6, which is marked out here. And the other one is the 1.272. So this is on dollar index, right? So basically, if we see a break of this area, which is at around 102.60, a break of this level would give us a further upside confirmation for a deeper pullback into the 104.20 level. Okay, so you might just want to use round numbers. Okay, right? So usually I try to keep the last two digits to either 20, 50s, or 80s. So this is on dollar index. Let's take a look at euro dollar. So on euro dollar, again, from the higher time frame first, right? So if you're on the weekly or even, I believe, the monthly time frame, here, right, you can see that over here, there is this support and resistance area. Even if I were to stretch it to the left, essentially, this is an area where price respected, and then right now we're seeing some kind of rejection of these areas. It's on the monthly picture. If you're on the weekly time frame, right, you can see that this is the region here. So if you're on the weekly, you can see that this is the area again, right? How we identify the zones, we try to draw a horizontal line in between and see if prices did respect this level. So you can see over here, right, this is a zone that we can consider because price tested this level from both the top and bottom. You can see that price tested as both the support and resistance, whereas in some cases, right, if I were to draw a horizontal line, let's say here, you can see that in this case, right, this is not valid. This line that I've drawn, the second line I've drawn is not valid because of how price chops around this zone. So this is one area, right? In terms of highlighting based on supply demand areas, you can see that again, this is the candle, right? So this zone, essentially, if I were to highlight it based on specific supply demand areas, right, I would just consider this candle here. Okay, so there's this, you can see that in terms of price movement, there's this strong push up before price pushed up much lower. So this is the supply area, right? And then if you go on to the daily time frame, you can see that coming into this region on the daily, there are higher lows and higher highs that are being formed. And right now on the daily, in terms of the support area, this is the daily support here. Okay, so this is the daily support. So I'll just highlight this daily support in gray, right? So this is a daily picture. If you go on to the 4 hours time frame, just for a clearer picture, right? So back previously, right, when we saw euro dollar, we were somewhere here, right? So let me just backtrack slightly. So this was the area. You can see that we highlighted the support area, which this is now no longer valid, but the idea is that we highlighted the support region over here because this was the previous resistance turn support area. Again, if I were to just draw a horizontal line across, you can see here, right? So essentially, this was the first support region. This was also the area that caused a break in structure. So if you look at market structure, right, higher lows and higher highs, you can see that this is the last low and this is the high. So price broke above this high. So what this suggests is that as in a bullish market structure, any pullback into the demand area can present opportunities to buy with your stop loss just slightly below this low. Because if price breaks below this low, that's when there's a change in structure, right? So back where we saw this chart, if price breaks below this area here, there's a change in structure, we want to get out of the trade. So this is why we want to put our stop loss below this low. But as far as what we are seeing here, you can see that's still bullish market structure. Just mark out the highs and lows. You can see that subsequent highs and lows, they're still forming your higher highs and lows here. Okay, so this would be this resistance level, right? You can see there's a demand area over here. So right now we have found this area, right? What we want to do next is again trying to find if there are any support or Fibonacci retracement levels that line up here. So what you can do, identify the last moves, right? So you can see that for every Fibonacci retracement, we want to identify a low and a high because that's what we will be using as our starting point. So Fibonacci retracement from low to high, you can see that there is this area here, right? So taking a Fibonacci retracement of the low, ending at a high, you can see this region, right? So what you want to do, let's take a Fibonacci retracement tool from low to high. And then usually for trending markets, right, two key retracements that I like to watch for would be the 61.8 and 78.6. For some reason, right, when you take the 61.8 and 78.6, if it's in line with an ascending trend line or trending market, right, these are pullback areas that we can look into, right? to buy or to sell, right? Either one. So in this case, you can see that price broke above this area, right? So currently it's testing this 61.8 region. And this is the daily, the gray zone that we've marked out. This is the daily demand, right? So when price pulls back into this region, this is in line with the 78.6. You can see the 78.6. It's basically holding within this gray zone. Okay, so this is the picture on the 4 hours. So how do we know whether this demand area is going to be respected? Again, we just highlight on the 1 hour picture. So you can see that on the 1 hour picture, what we have is that again, my prices are starting to form your lower lows and lower highs. So coming into this demand area, what we also have is that as long as price pulls into this demand area, right, if there is a demand that's being respected, there would be a change, a break of the last high. So this is what we want to keep a lookout for, right? So if price comes into this region and we start seeing a break of the last high, then what this suggests is that this demand area is being respected. So this is one, right? And then this is the 1 hour picture, right? So this is on euro dollar. So this is the demand area here. If you go on to the 4 hours, you can see that this is again the support region. So if price comes into this region, right, what we can see next is that coming into this area here, this is the 1 hour picture, right? So when price pulls into this region, we have this area, right? So you take a look at this, right? So this is actually just a straight move down. So if you see that demand areas are starting to be respected at this zone, right, then what we have over here, where is the next resistance? So you can see again this area, right? So why is this a resistance area? Because of how price hesitated here. We saw that buy. So essentially at this area, there are buyers coming in to buy, but fail to push prices higher before price moves down. So this for me is the last support and resistance area. Even if you were to put it in a line chart, you can see that you just draw a horizontal line across, right? This is an area where price tested as a support previously over here before it broke below, right? Represented by this bearish candle with small wicks. So this is the next region, right? So if we do see price coming into this demand areas over here on the daily, right, you can expect a bigger move up to test this resistance here. Okay, so another thing that we can also check, right, would be to take a look at our Fibonacci extension. So for Fibonacci extensions, they are basically zigzag patterns. So you can see that this is an example of a zigzag pattern, right? So for those of you guys who want a deeper detail into how we can use Fibonacci extensions in different market structures, right, do take a look at the recording and the session that was recorded yesterday. So in this case, this is a Fibonacci extension. This is the zigzag pattern. You can again take this 3 points, 0.1, 0.2, 0.3. For your Fibonacci extension. So these are the 3 points, 0.1, 0.2, and 0.3. Right, and then again, open up the key extension level. So you can see that in this specific example, the one that will be in line with this zone would be this 1.618. So when price comes into this region, right, there's an area that we want to watch. If on the smaller time frame, right, if you're on your 1 hour time frame, you can see that demand is starting to gain control. But this suggests is that this price itself, right, could have respected this demand and we could see a deeper pullback into this area with this as the next resistance. Okay, so this is the picture for me on euro dollar right now, right? I'm not taking any immediate entries over here, but rather I'm just waiting for these positions, right? So if price comes into this area over here, this zone, right, then I'll set an alert, right? And as long as there is a change in structure on your smaller time frame, it can be 15 minutes or 5 minutes, then you wait for that confirmation to play the move up. Okay, so this is the picture on euro dollar, right? Let's take a look at another setup, right? So the next one that we have would be on, let's take a look at gold, right? So gold is also sitting on an interesting level right now on the 4 hours. So again, we want to start from our higher time frame. So gold has been pretty wild lately. So in this case, you can see that on the higher time frame first, weekly, daily, right? You have some kind of descending trend line over here. That's one. There is also this resistance area or supply, right? So this region over here. Okay, so this is a potential supply, right, on the weekly time frame. If you're on the daily, you can see that on the daily, we're seeing some kind of consolidation into this region, right? So let me remove the higher time frame areas. And if you are taking a look at specific candles, right, you can see that just taking a look at this candle, there is again this area consolidation before price peak, And you saw that this is followed by a bearish candle. So showing that there's strong selling pressure and buyers basically fail to push prices higher, right? So the bullish momentum cannot be sustained. There's a lack of buyers coming into this region. It just wicked up slightly higher before there's strong selling pressure, right? Represented by this bearish candle. So this for me is the supply area. So we could still see another push up into this area, this region here. So this is the region for me on the daily time frame. If you are on the daily, right, you can see that right now, at least where we are, there is demand. So take a look at the most recent developments over here. You can see this area. So prices are moving in sideways here. So prices are testing this support. You can see how the support level has been tested twice. Once over here and another time here. So this for me, it's still a support level, right? There's still demand. So this is still the demand zone. You can highlight it based on specific candles, or you can just take the lows, right? So for me, this whole area itself is a demand region here. So this is on the daily. There isn't anything much that we can find from the daily, right? There isn't any Fibonacci retracement we can do as well, because from this movement, there's not a huge significant price action. So this is on the day 4 hours, right? So let's move to the 4 hours. Now on the 4 hours, you can see that prices are coming into the demand region again over here. There is also a break in the previous structure. You can see that price broke above the last high. So this is the demand that we have, right? So again, if price comes into this demand region, we have to ask ourselves, right, coming into this demand area, how do we know whether this zone is going to be respected? You can see that if you're on the 15 minutes or even the 5 minutes time frame, there will be lower lows and lower highs that are being formed coming into this region. So once there is a reaction, right, buyers are starting to come in, it will push prices higher. There will be a change in market structure. So take a look at the most recent price action. You can see that if I were to mark it out in a high, right, just mark out the highs, right? So just mark out the peak and troughs. So if we have a hard way of identifying which way, right, whether there's a change in market structure, right, just mark out maybe the last three, the most recent highs and most recent lows, right? And you can see that right now it's still pushing lower. So what this suggests is that we could see a deeper push into this demand area here. Okay, so this is on the 15 minutes, right? So when price comes into this region, right, we have essentially a low over here, which prices are currently testing, but this low itself doesn't tell us anything. It's not a support. And the reason for that, it's because you can see that as far as where we are right now, in terms of the most recent highs and lows, prices are still forming a bearish market structure. They're still forming lower lows and lower highs. So this is your last high, right? So if we want to wait for a change, we need price to break above this level, retest it as a support before it continues much higher. So this is on go, right? So right now it's on the 15 minutes time frame, right? We might see more developments later tonight. So this is the picture, right? I have a question. I agree, it's still demand zone, but it's depending on NFP data can get crazy spike. But if demand is respected, what level will it go to? Yeah, so that's a huge one, right? NFP data and also just fundamental drivers in general. Okay, so let's take a look at 4 hours, right? So okay, so let's take a look at the support, or I mean the resistance area. So in this case, right, if price taps into this demand region over here, you can see that the next 4-hour supply, it's actually this high. Okay, so this is the 4-hour supply. So if we are taking any long positions, this is the higher time frame target on the 4 hours. If you're onto the 1 hour or even the 15 minutes, right? So let's be a bit more conservative, right? In this case, you can see that on the 1 hour, 30 minutes, all across, right, there's this horizontal line. So this is an area that I want to consider break even and partials. So if we do see a pull up into this area, you can see that this zone, right, that was previously tested as both a support and resistance level. This is one area to watch. There are a few ways you can do this. Either wait for this, right, as upside confirmation, that's one, before you play a further push up, or if you have a long position slightly below this region, what you can also do is to wait, either close percentage of it, right, and close out at, move your stop loss to break even. Okay, so this is the area. So this level stands at, I would not say that this is the resistance, right, final resistance, but rather this region for me would be one to determine if prices could move higher. So this region that's at around 1927 drop. Okay, so I hope that helps. So in this case, right, this is basically this area here. And if you take a look at the Fibs, right, so again, Fibonacci retracement to find resistance, this is the high and this is the low. So right now, in terms of the Fibonacci retracement, if you were to take the highs and lows, you can see that in this example, right, the 38.2%, 23.6. So there isn't any level that it's lining up here, right? So if price develops further, right, so if price pushes much lower, then you will have to move the fibs. So which is why this area, right, I won't take Fibonacci in isolation as much as possible, right? I try and see if there are any Fibonacci retracement that lines up with the zone. We wouldn't know whether this is the low that's being formed, right? If price pushes lower, then we have to adjust the fibs, the Fibonacci retracement essentially. Okay, but just based on graphical level, you can see that this is an area on the higher time frame. If price tests this level and it continues much higher, this would, for me, is the upside confirmation. So if we do see a pullback into this area, we need a break of this level before we could see more upside. Okay, so I hope that answers your question, Chong. Yeah, and we will likely will see crazy spikes, right? NFP data, like FOMC as well. So, I mean FOMC on Wednesday. Okay, so this is one. And then we also have, let's see, and another setup, right? So if you guys have any other setups that you want me to go through, do put them under the tab, right? If not, I'll just be taking a look at the setup on Aussie dollar. So Aussie dollar here. So you can see that this areas, right, partly driven by the dollar's weakness as well. So most of this dollar denominated currencies for this week has just been on a very strong uptrend. Okay, so let me just remove all this. And again, we start from the higher time frame. So we're seeing it pull back into the higher time frame. There's a resistance level that price came into. You can see this area over here with a sweep above, right? So price swept above this region. That's one, it swept above the high. So this is on the weekly picture, right? So just some kind of resistance. I'll just highlight this area over here just for us to keep in mind. Okay, so price is coming into some kind of weekly resistance with a sweep of the last high. You can see that price swept above the high. So depending on how the sweep closed, right, seems to be a huge move up here before that rejection. So this is on the weekly. If you go on to the daily, you can see that again, right? So price came in, swept this high. Right now on the daily, if you take a look at the overall daily, right, you can see again in line chart, what we have is again subsequent higher lows and higher highs. Just look at the peaks and look at the troughs, right? Subsequent higher lows, subsequent higher highs, right? If I were to mark out the last three peak and troughs, you can see that overall they're moving in an uptrend. Okay, so this is on the daily picture. On the daily, you also have this daily demand, right? So actually Aussie dollar, gold, right, they're positively correlated. So, and especially when the dollar weakens, right, they tend to move in the same direction. So in this case, you can see that there is again on the daily is a demand area over here. Why? Because this candle itself broke the last high. We saw that strong rejection. And this candle with long wicks also suggests that there are a lot of buyers, right? Buy orders are being triggered over here before they push up. So this is the daily demand, right? So if we want to take any shots, right, it's best to wait for a break below this low. Okay, so unless price breaks below this region, for me right now, it's still in a bullish market structure. If you're on the 4 hours time frame, you can see that right now on the 4 hours, again, right, we're coming into this demand area. What you can do, Fibonacci retracement of this move. This is the move up. And if you take a look at market structure on the 4 hours, you can see that there is a break of this high, right? So if we talk about break in market structure, price wick above this area, right now we're pulling back into this region. So if you take a look at Fibonacci retracement, right, and see, trying to find if there are any levels that line up with this zone. So this is the last move up before we saw that pullback. So Fibonacci retracement taking this low and high. So once you see that, right, when you take a Fibonacci retracement from low to high, again, just open up this key levels, right? We have our 61.8 and 78.6 line here, right? So these are the two levels. Currently, prices are testing this level, right? So you can see into this demand area. This is on the 4 hours. So how do we know whether there is some kind of reversal, right? This reversal, it's formed if prices break the last high. You can see here, right? So again, bearish market structure coming into this area, this pullback. You can see it in line chart as well. Just mark out the highs and lows. So what we have, subsequent lower lows and subsequent lower highs. So it's still in a bearish market structure. So the assumption is that price will continue in the bearish market structure and it could go deeper into this demand area unless there is a change in this last high, right? So unless price breaks above. So if price forms a new low, it creates this high, right? So in a bearish market structure, you can see that the last high that took out the low itself should be holding. So which means that this is the high, right? This is the high. Price broke below this region. So if price breaks below this, above this area, this zone, right? Let me just draw this in a horizontal line. So this is the area, right? So this is the high. So you can see that if price breaks above this region, right, this is our upside confirmation level. So if we are seeing a respect of this demand area, we need price to break above the upside confirmation level. Again, for a deeper move up, this would be the Aussie dollars area, right? So this is the last resistance level because it was the previous area that consolidated. I'll put this in a different color. Let's put this in blue, right? You can see that this is the region, right? So again, price testing this area before it fails. And right now it's pulling back into this region here. Okay. Okay, so yeah, so this is all that we have for today, right? So yeah, so let's take a look at NFP data later and see how it turns out, and we will review the setups again next week, right? So thanks everyone for staying with us, right? And we will be catching you guys again next week. Trade safe, stay safe, and we will catch you guys again soon. Okay, sorry, I just saw your question, right, Chong, on dollar index. So let's take a look at dollar index. So if you take a look at dollar index, right, I actually went through dollar index just now. So on dollar index itself, right, basically prices are on the higher time frame. You can see that it broke this demand area. So it's sitting on the monthly support area, but if we want price to continue sitting on this monthly support that we have over here, you can see that on the daily picture, we need a change of structure. So we highlighted this area as the last resistance, right? So if price breaks above this, this is the last supply zone. So if price breaks above this area, we could see a bigger move up here, but if not, it's currently still holding below supply. Okay, so this is the supply region. So right now it's pretty similar to the setup on gold and Aussie dollar. Dollar denominated pairs, we have dollar that's testing resistance, whereas gold and Aussie dollar, euro dollar, they're sitting on some kind of support level right now. Okay, so I hope that answers your question, Charles. Okay, so yeah, with that, we have come to the end of this session, right? So thanks everyone, stay safe, trade safe, and we will catch you guys again next week.